Now, as I always tell you, insurance is a sunrise sector to India. General insurance business, we are looking into this for a short-term contract, and we are also looking at it as a non-investment, non-savings component. The market value of the property at that time will be done, and basis for the payment or the loss would be calculated. Good morning and welcome to the first session, Unit 5, third semester Insurance Management in BCom, where we're going to talk about the general insurance business. Now, as we talk about general insurance, this is quite different from the life insurance process. Now, general insurance involves providing coverage for all non-life risks such as health, or then when we're talking about vehicles, homes, and travel. So unlike the life insurance, which typically involves a long-term contract, general insurance policies have a shorter lifetime span. So this is very, very important for us. Why? Because this does not include any savings or an investment component. The main thing that one has to understand here is that the general insurance is more about understanding the non-life, non-commitment factors here. So when you are investing money onto your life-related factors or issue, so there might be an investment component, there might be a savings component that can come inside. But in a general insurance business, we are looking into this for a short-term contract, and we are also looking at it as a non-investment, non-savings component. Now, as we move further, all insurances other than life fall under general insurance. So quite a big bracket that we are talking about. And the General Insurance Corporation of India transacts the process altogether, the business in India. The following are the types. One, we start with marine insurance, which starts with looking into the oldest form of insurance covering all the marine perils. That means to say the challenges that are there, and the ship can be destroyed or the cargo can be lost, or it can, frequently get completely affected, whatever is the process there. So the marine insurance covers the risk to the ship, cargo, and to the freight. Now, let us talk about fire insurance. This covers the risk of fire to the property because there is every likelihood of fire spreading in big factories, godowns, warehouses, shops, and to other places. Now, people believe fire insurance is something that is not needed because 99% of the time I'm not susceptible or prone to fire-made disasters. But the reality is that when you are having a shop or a commercial establishment, as per the environmental health standards, fire insurance is mandatory. And this not only covers the risk of fire, but also the consequential losses that are happening due to fire. Now, the liability insurance covers the risk of liability towards third parties which are insured, required to pay, such as damage to the property belonging to third person, injury, or death of the third person, both in case of accident. So we will normally look into this in terms of the vehicle insurance. So whenever you're buying a vehicle insurance, let's say from ACO or from Go Digit or from HDFC, Oriental Life, wherever you're going into these factors, these insurances will be able to go on a liability base where they cover the third party insurance also. Now, let me also start talking about something called social insurance, which is very, very important today. Why? Because this is being done to uplift the weaker sections of the society, and maybe in different forms like pension plans, disability benefits and unemployment benefits, sickness insurance, and so on. So premium under such insurance schemes is paid by the government or the employers or by the both. In some cases, employees or the beneficiaries also contribute to the share of the employment. Now, when you look at the social insurance part, India has got a part of society which is still not able to find job, not able to have a regular course or walk of life, or they also find many a times that there are challenges in terms of understanding how things are working. So they might need some support. They might need some kind of help to run their normal life. So social insurance becomes a part of the society which covers the unemployment, which covers the different aspects such as pension plans, and sickness insurance, industrial insurance, and other factors. So these are being given as a coverage, as an employment benefit altogether. Miscellaneous insurance, for example, we are talking about guarantee insurance, theft, burglary, export credit insurance, crop, we are talking about cattle, personal accident, and there are so many other factors that are coming in the insurance sector. Now, as I always tell you, insurance is a sunrise sector to India. Only after 2000, we started opening up the insurance sector. And after 2002, when the IRDAI Act started allowing the foreign institutional investors to take up a stake in the Indian company or start investing in India, the insurance started seeing a pretty much light at the end of the tunnel. So I would say that in the last 20 years, the insurance sector in India has made rapid strides and development in terms of growing in the insurance business. So when we are talking about cattle insurance, crop insurance, or we are talking about vehicle insurance, personal accident or travel insurance, there are many more such to come, and all these insurances would definitely try to uplift the life of a common man. So I would say that the general insurance is a huge business with the scope being literally unlimited. Now, fire insurance, as we have told, it's a legal contract that we try to see between the policy holder, which guarantees that any loss or damage that is caused to the policy holder due to fire accident, and that will be paid by the company, including the losses that has happened in terms of the goods and other factors. So, when we talk about this insurance, especially the fire insurance, sometimes you might find that accidental fire, or it's because of the electricity getting short, or sometimes due to explosion, there might be untoward incidents that might have happened. Now, let us take, for example, the most unfortunate incident that happened a couple of days back in our own capital city, Delhi, due to a bomb explosion where several vehicles and shops were gutted because of the bomb factor that exploded. So sometimes unfortunate events like this can put the business completely to a backstage. So that's where you need a fire insurance that will cover you in terms of all calamities together. Now, the nature of fire insurance is something where you have the utmost good faith, where we say that in case of all the materials and statements that are being provided are true to the nature, they're not going to change. They're going to understand that what is happening, how things are happening for you. So it's very important that you understand it. Similarly, the surveyor understands what is the estimation of the property, how it has been done, and we are also going to talk about his observation under that needs to be pursued in terms of how this needs to be taken into account. The observance of good faith is necessary to be brought out in terms of the insurance process. Any contrary behavior, either of the parties, will become a breach altogether. So definitely these are certain things that we are looking in terms of the insurance factor. One has to understand it completely. Similarly, a person also needs to understand on this factor that any kind of undisclosed factors, undisclosed elements coming into picture, then we might have to take severe action, because the company might feel that they are being cheated under several grounds. So it's very important that once we understand what is going on and how things needs to be pitched upon. Similarly, we are also talking about something which is very interesting on the valued policy, which means to say that as we continue, the policy of a fixed amount is already kept in mind in case of fire accident, and then irrespective of whatever happens, the amount will be paid to that policy holder. A valuable policy is one where you look into it that we don't have a fixed amount kept based on the assessment of what has happened in the market, happened in the scenario. The market value of the property at that time will be done, and basis for the payment or the loss would be calculated. So many a times what happens is that people go with the valuable policy factor because we do not know what is the market value of the property at the given time. So the companies take the assessment, understand it, and then get into the loss payment. Floating policy, this is a kind of thing where you would see that there are several kinds of lying different localities in relation to the same owner, and then you can see that you can cover several kind of aspect. It is specifically to meet the requirements of traders whose stock of goods might be lying at different places like warehouse, port, railway station. So you take a floating policy that covers all the places. Excess policy, when the stock in hand fluctuates every time, the insured call one policy called as the first loss policy for an amount below the stock that never goes in another, and we call it as the excess policy for the balance of amount that is being declared. So every month we look into the premium that is being charged on an average basis. So this is very, very important for us to understand how do we get into it in terms of the thinking factors. Reinstatement policy. So the insurer understands and takes this factor very clearly. He says that the place of insured, that might be property subjected to risk irrespective of its value. Sometimes we might be also calling this as a replacement policy. That means he understands that I am ready to replace the affected property completely and irrespective of its value, time and loss. The insurer undertakes indemnity of the insured not only against the fire risk but also such as burglary, theft, riot, civil commotion, lightning, flood, etc. So all this called as the all-risk policy or all-in policy, which does not mean that to cover each and every risk. These are certain exclusions also. So based on that, we are talking about this policy. Now let's have a comparison, the comparison of life insurance versus general. So you would see that the life insurance is more understood as a contract which covers the life risk of an individual. General insurance, other than life, everything else is being covered. Now, it is a form of investment, life insurance. This is a contract. This is for a longer term. This is for a short term. Insurable amount is paid either in the occurrence of death or maturity. But here it is reimbursed and it has to be repaid based on the incidents that take place. So that is the difference that you see between a general insurance and that of life insurance. With this, I come to the end of this session. I hope and believe that all the facts and figures that we have spoken will be of a great value to you, both in terms of practical and as well as in the theoretical walk of life. So with this, we come to the conclusion of the insurance management subject. Hope to believe and understand that all these videos will help you to learn better, score better in the exams. Wishing you all the best for the upcoming exams. Do well and score well in the exam. Thank you once again for joining me today on this wonderful session. You have a great day.